Those were the days, my friend, we thought they'd never end. We'd sing and dance forever and a day. Forever and a day. Top-down analysis. Let's see how we can do it. And a warm welcome to one and all. If this is your first time here, I am the singing talent that is the Scruffy trader. I say that in very inverted commas as you cough into your coffee, because we all know Scruffy likes a coffee, and he certainly does. So maybe that's what we should be doing, having a coffee and not listening to Scruffy having a sing song. Or then again, maybe he's having a coffee and watching Scruffy on the whiteboard. How's that? So if you're not rightly sure what all this is about, I am the Scruff. I do trade for a living. And I made a promise to the Scruffy squad that I would do a basic top-down analysis on the whiteboard. And I'll do that for general public use. And then I'll deep dive into it for the foundation. And they can see it on the charts. But the idea of this video is to give you a rough idea of what to look at and why to look at it in the first place. So if that sounds good, you like trading in the real world, do click that little subscribe button. Genuinely helps. Smash the like to help the video on the algorithm. And if you want to see further content, drop in the description. You'll find my Twitter link. Simple. Or is it? Let's find out. So first of all, what is top-down analysis? Well, the top-down analysis is basically getting a bigger picture from the higher time frames and working your way down like a funnel to your entry chart and then just, well, trade. Simple as that. Now, I work on a principle of 3, and I'll explain that as we go through. But basically, it is overview, main direction for the day, entry. That is the rough idea. So let me try and paint a picture of this. I like to use visuals because it's a lot easier than looking on a chart. You get a lot confused. Now, if you can imagine a family and it's sort of, I don't know, the hereditary line, shall we say. You'll have your great grandfather. This is great granddad. Call him GGD. All right, great granddad. All right. Why is he important? Well, he knows a lot of sort of historical events because he was there. He saw it. So if you're listening to him, you can tell an interesting story. So who is he in this sort of scenario? Well, it is the monthly chart. That is your great granddad. He has the most information and he has a broad outlook on life. But I don't know how you feel with your grandparents, but mine,
Matron, take them away.
Is a nightmare, right? He knows a lot, but he's not grounded in the here and now. He lives in the past. Your monthly does the same. Knows a lot of information, but sometimes isn't relevant to today. But then you have granddad. You know, your father's father. He's here. Okay. Now he's just granddad. GD. What does he know? Well, he's still been through a lot. He learned everything from great granddad, but he's a little bit more zoomed in because he's closer in touch with, well, you, for want of a better word. And who is he? Well, that is your weekly chart. Okay. So you're gathering information from the old time fathers, if you like. And then the next one is your father, your dad. So this is the next part of the puzzle. Okay. And that's your day chart. Or daddy chart, as sometimes you hear me call it. Because you can take your levels from a day chart called daddy levels. Why? Because they show the path to the children. That's what parents do. So who are these in the equation? They're the overview. They can tell you what is going on in the big picture because they have more information than any other part of the charts. And combined, they are quite powerful. So how do you combine them? Well, if you look at it this way, and you just assume that you have some moving averages on, just like so. And on this one, the price is, as you can see, rising up. Okay. And then you see this one here where the price, change the color a little bit. Change the color rather. It's kind of running through it like that. And it's not really going anywhere. But then on the daily, you can see the price is broken through and is going like so. What information can you gather from that? Well, straight away, I'll be saying whatever buying pressure trends has been up, it is starting to roll over. So could this be an idea to go short? And this is just a simple way of doing it. There's quicker ways of doing it. I mean, that's just using a moving average in an example. But you could put a MACD on and you could see if the MACD is in an upward move or a downward move and then plot it on each one of the markers. Or you could use an RSI, do the same thing. My preferred version is an RSI. It can kind of show the waves of the market. So we have an overview. All right. Your overview. And that has been built from 3 charts. Okay. And those 3 charts being the month, the week, and the day. All right. Important. Where's the next part come into it? Now you need a sort of bias. You want to know whether it's going up, down, indifferent, so you can zoom in for your trade. All right. So here we're looking for the bias, the up or the down. So where can you draw this information from? Well, if we're thinking about the family tree and we sort of stepping down each time and they're overlapped, we'll start with daddy. Your dad has learned from the grandparents what's going on in the world. In other words, when you're looking at the daily and you've had a look at the monthly, you can see it's rolling over in this instance. And that is the information he wants to pass down to the child. Okay. Now you're going to have an elder brother or elder sister and siblings, etc. So the daddy is now going to look at, I don't know, put a pair of boobs on that, sister, right? Just so that I'm not being told that I'm sexist by not having any sort of females inside it. But the sister can also guide you. Right? Why? Because they listen to dad, and actually a sister's probably the best way of looking at it. Because if I look at my family, it's sort of me and my brothers is like the evolution of man when you see it going from ape upwards. They are Neanderthals beyond belief. But my sister is incredibly academic and sensible, and if you want advice, that's where you go. All right, elder sister. So what's that? What's your 4 hour? Okay, that's your sister. So what we're looking for now we're looking for confirmation of bias.
Are you serious?
And that confirmation, again, it's always packed in threes. You know, I like a rule of three, as I said at the start. So we're looking to see if there's any correspondence between these. And then you've got your little brother here. And that's the 1 hour. All right. So what's these three trying to achieve? Well, we started off with an overview up here, monthly, weekly, daily, to get a gauge of what's happening down on the day chart. All right. So you're looking at one to the next to the next. See if there's any correspondence. You're then zooming in from your daddy to your sister to your brother, which is your day chart, your 4 hour, and your hourly. And again, what you're trying to do is align them to the overall trend, what you've just brought from the overview. So basically what you're doing is high time frame, rephrase that, high time frame trading on low time frame entries. And this is what we're driving at. But this here is just a confirmation. And how is that? You do it the same way that worked. You're drilling down to see, except now that is score one. All right. That is what we're looking for. All right. If this is not going the same direction as that, you are counter trending, and you want to understand why you're counter trending if you're going to enter. Now that can be, okay, well, I can see it's massively away from a moving average. I might just have a conservative target running up. If I am going with the flow, I might have a double target. So instead of going for 20 pips, I can go for 40 pips because I think the pressure's with me. And instead of targeting the next level down, I'll target the level below that. It all helps. So that's what this is doing here. All right. So that is the day, the 4, and the 1 hour. And then we come down to the third part of the equation. Number 3. And this is your in. And what's the in? It's very simply, it's where you're going to get in the market. Because before you go down into your trading charts, you should already have an idea of what you're trying to achieve. Because if you don't, you're gambling. And that's where you fail. You know, and I say it time and time again. Because they don't pay attention to the monthly. They don't pay attention to the midterm. They just want zoom in. Now you can be trading down on a minute chart, but they have relevance for you. Okay. So where do we go from here? Again, we overlapping, except now we down into the kids, the 7-year-olds, the 10-year-olds. They know a bit of information and they can kind of do as they're told, but you wouldn't trust them on their own. And that's the point of the family tree. The kids down at the bottom need supervision. You know, say go tidy your room, go sort of put that in the fridge, help mum put the shopping away, all of this sort of thing. But they have to be supervised. And that's what this is. So you're looking to align here. These need to be aligned. So how do you do it? Well, the way it worked when I grew up, my elder brother looked after me, and I looked after my two younger brothers. It was kind of a succession down, and my elder sister looked after us all. So again, we're coming back to a power of 3. 1 hour supervising what's going on. Down into another sibling, which is the 15-minute. And then down into the toddler, which is a 5-minute. And what are we doing here? Well, again, we are aligning ourselves right through the charts process. So here, I just draw that in there. It'll be the 1 hour, the 15, and the 5. They're all minutes. And if you've come to a conclusion that the overall market is down, as we said to start with, the intermediate is agreeing with that. Here. All you are looking for from an hour downwards is sells. And likewise, if you were looking for longs. Now, it does get a little bit further into this because you can counter trend in one thing and another. But what we're doing here is we're looking to go with the dominance. And a lot of the time, the dominance is the way to go. You know, as you get better and you're more advanced, counter trending becomes something else, but you're in, you're out, and you don't outstay your welcome. This you can hold into your trades. So from here, all you would do if you are, for argument's sake, using moving averages, you have your 1 hour, and it has a moving average like this. You ensure that the price is starting to be below it. So it's going with the flow. Then you're dropping it down to your 15 min. And you're looking for a similar situation there. And then before you go to your 5 minute, your decision's already made and you just need your trigger point to get in. Why? Because right down the family tree, it's told you what to do. Now that is basic top down. In other words, start at the top, work your way through it, and you'll be fine. So just in summary, clean this all down for you. There we go. So in summary, number 1, OV. Overview. All right. See where the market is, and you're looking for a monthly, a weekly, and a daily, ideally to give you a direction. All right. So you make a choice out of those 3 markets, or those 3 time frames rather. You're then going to look at the midterm. We'll just mark this as MT for now. Midterm. This is giving you confluence for the day over the next sort of, well, next few hours to the next couple of days. And here you will use the day, the 4 hour, and the 1 hour. And again, you're looking for them to have a confirmed direction to that. Okay. So whatever you decided here, you want it to correspond down there. And then finally, you want your in. Where do I get in? How do I get in? Why do I get in? Well, with this, you're looking at the 1 hour, you're looking at the 15 min, and you're looking at the 5 min. And again, you want an alignment of direction to that. And that's it. That's top down all the way. Now, as you work through the charts, you'll sometimes come across a point where it doesn't all line up and it's higgledy-piggledy and you get confused and you think, oh, this can't be right. How do I filter the noise down if I can't see it across that many charts? Well, you go back to power of 3. And what you would do in this instance is, it is exactly the same, but you pick one time frame out of each. And the way I do it, my preferred way, is day, 1 hour, 15 minutes. And what I'm looking here is that down. Same principle. But what's happening is I've just narrowed the field out. And what I need to do is whatever I've decided up here, that and that must align. Simple stuff. So I hope that helps. For the scruffs over the next few days, I'll go back into foundation and I'll put this all in a chart. And as you see the breakdowns that you often see me do, where I do go from a monthly all the way down, I'll explain this principle as I go. So I hope that helps. Like I say, if you're stuck, I'm very easy found. If you want to see it in depth, do go down in the description. You'll find links to the Scruffy Squad. But you'll also find good links for brokers and discount links of prop firms, that sort of thing. Giving you a little bit of value. So as always, guys, trade well, your risk managed. Above all, do what you love and the money will follow. See you all in the next one.